Hello, this is Dan Martinez with eXp Realty, and it's time for the real estate market update covering Thurston, Mason, Lewis, and Grace Harbor counties in the state of Washington for February 2022. Since we just completed January, there's not a lot to dive into yet, as we're kind of waiting for the market to get going for this year. And so I'm going to quickly go through some key indicators just to status where we're at going into 2022, and then spend more time on what's really on people's minds, buyers and sellers. And those are inflation and interest rates. And so we'll do a little more of a deep dive into those, kind of see where we're at, where we are projected to go, and what that may mean for the purchase and sale of homes. For the median sales price, the key thing here from January 2022 to from January 2021, we see the year-over-year increases for the month pretty much the same for all counties at 17.5% up to 21%. And so we kind of see here that we've got a new bar established up here for these median prices of these different counties. And we saw that last year too, where we have a little bit of a, let's get to 2021, a little bit of a bump after January, and then a bit of a climb. And as we're going to see in the analysis later on, we don't expect that much of a climb this year, but we do expect these prices to hold and even increase a little bit from here. Looking at new listings, we see we start to tick up a little bit, and again, same pattern last year. If we go from December to January, we see that we start moving up just a little bit, and then things really start to take off. And we can only hope that we see a similar pattern this year, so we have lots of homes for all the buyers that are out there. But that's what we'll be tracking as we move forward. The percent of original price that the homes are selling for, we got a little bit of an uptick in Thurston County, which is pushing it up over the 1% of the original price. Everybody else is even, or look at Grace Harbor has even went down a little bit. So some interesting things happening in Grace Harbor, because when we see the sale prices are up. The median sale price is up. The percent of original price is down. And then the days on market are up. So my theory at this point is that they got a little excited there in Grace Harbor and started pricing their homes higher than what people are willing to spend, and so they sat around a little bit longer. And eventually, when they did sell, the sellers had to concede on the price, and it came down to about the current median price that people are willing to pay in the harbor. So it could still go up, but what I'm saying is they just started higher and then came back down to eventually sell at this median price, which seems to be about what people are paying in Thurston County. In Grace Harbor County. Days on market. Okay, we did talk about Grace Harbor is shot quite a ways up. Thurston says 50%, but that's only going from 4 days to 6 days. And Mason and Lewis are also up a bit here on their days on market. So that's kind of an interesting trend. Could just be not that much activity in January. Homes that were already on market were just kind of taking a little, sitting there a little bit longer to close. And so we'll see, how that pans out moving forward. That's really all I wanted to cover on this. As far as some of the key indicators, we're still anxiously awaiting to see what the market's actually going to do. I did see some spike in homes that were listed for today. New listings at 52, and this covers homes listed within the last 24 hours in Thurston, Mason, and Lewis counties. So we are starting to see more homes come to market, but then they are selling pretty much as fast as they get listed. Now I'd like to go into the inflation and interest rates. I'm going to use information from this webinar I attended this week. It was done with Tom Ferry and his team. As you can see, Tom, he's been a real estate coach for quite a while, 9 consecutive years ranked number 1. So I trust his data. He uses a variety of sources. And so the first thing we'll cover is inflation. Real estate is one of the time-honored inflation hedges, a tangible asset that tends to hold its value. And as we look at some of the data, this graph shows us in the blue the inflation rates over the last several decades, and then the home price appreciation, which for most years is significantly higher than the inflation rates. So your home value is maintaining well above what inflation is doing. So just demonstrating what a good hedge of your home is above inflation. The other aspect here is the mortgage, what you pay for your mortgage versus rent. Hedge that your home has against inflation is that your mortgage payment remains the same, of course, unless you get a variable rate mortgage. Where purchasing a home and having a mortgage is that your mortgage is pretty much fixed, except for the taxes and insurance that go up. But they usually don't go up as much as some of the rents that we've been seeing lately. And so that's another thing to consider, especially if you're being squeezed with your rents these days. Here we're looking at the core inflation rate in the blue, and then your rents, and you can see your rents are often above the inflation rate, and so your rents increase faster than inflation, and they can. And so here again it just says the homeowners are shielded from the rental increases because their cost is fixed, regardless of what's happening in the market. On this slide, housing is commonly looked at as a good inflation hedge, especially with interest rates so low. And even though there's talk about the interest rates going up, we're going to see that they're still historically low and still at a good rate to purchase. Just another forecast here regarding the house appreciation by 2026, and that's not very far away, just a few years. And the home appreciation is expected to go up a minimum of 24% up to possibly over 60%. And that's pretty amazing to think about, that your $500,000 home could be worth $800,000 in just another 4 years. And now looking at the mortgage rates, bottom line, we do expect rates to continue to increase, but at a gradual pace. And when they say more gradual, that's just get from the initial jump that we experienced in January. So here's the 30-year fixed rate from January 2020 to today. So we see, in 2020 was, of course, the COVID, so rates are going down, trying to keep the economy stimulated, and reached the bottom here in 2021. We got things going again, kind of sputtering through, so mortgage rates, coming down again. And then with the inflation news of 2022, they took a jump, and the Feds are a little bit excited now and looking to raise interest rates. So now they're moving. So in the current mortgage rate compared to the last 5 decades, we see that over the years we're still at a historically low rates. And so it's really not the interest rates that are impacting affordability, but just the lack of inventory driving prices up so much over the past couple of years. The interest rates track the 30-year or the 10-year Treasury rates. That's what we're showing here. So the 10-year Treasury rate is here, and then the mortgage interest rates are in the green. And so I'll be tracking the 10-year Treasury rates to keep an eye on where we think mortgage rates are going. This just shows how much it has gone up over the past year. Right here we're starting 2022, and they've gone up to 1.87, which caused that little spike of 3.55, and come down a little bit, but anticipated to continue to go up. So the projections on interest rates by these 4 organizations, most of whom we're familiar with, the Freddie Mac, Fannie Mae, National Association of Realtors, MBA, they're all projecting increases over the course of the year, quarter by quarter, just a matter of how much. Some people think it's going to be even more than the 4%, but not crazy, not going to get, nobody's saying 4.5% to 5% at this time. So if you want to know more about what this does to your purchasing power, look for my video on down payment assistance and how you may be able to still afford a home in this market. That'll be coming soon on my YouTube page. All right, so home price forecast. We saw, year to year, the numbers, 17 to 21% for our local area. This is kind of a national projections, and so our community tends to be a little bit higher, so we'll expect them to be the year-over-year prices to be a little bit more, but still nobody's projecting crazy increases like we've had over the past couple of years. So if you're a home seller, you may be able to squeeze a little bit more out of your home by waiting, but not that much more. And if you're a buyer, the prices are still going to go up. So there's no reason to wait if you can afford a home, because you can still get into appreciation. As we were looking at the forecast up here, let's see, right here, we're still expecting home prices to go up quite a bit over the next few years. So by waiting, you're just going to miss out on some appreciation and potential equity. Okay, so that's where we're at today. A lot of moving parts, a lot to watch, and I'll certainly be doing that for you and continue to report on the progress and helping buyers figure out how they can afford a home, and sellers, you can still get a good price for your home and sell it quickly. Again, your challenge is where are you going to go? So that wraps it up for February 2022. Hope you all have a great Valentine's Day.